The dividend this morning is a real good sign of the strength of the company. We're in great financial position. We think this could lend itself to some opportunity for us.
Holy smokes, ladies and gentlemen, Johnson & Johnson is likely to be one of the few stocks to hit all-time highs during this pandemic. We're going to be breaking down their earnings, listening to the chief financial officer, and taking a look at those dividend increases. So, ladies and gentlemen, I look so forward to breaking this down for you. So let's jump right into this.
Drop it.
Welcome back, my passive income investors. I like to the pharmaceutical conglomerate that can only be compared to Pablo Escobar's empire. That's right, we're talking about Johnson & Johnson in the earnings today, guys. And keep in mind, this is a company you only have to step back to 2019 in August when they got charged with a $572 million lawsuit for causing the opioid crisis, and one of the largest holdings in my dividend stock portfolio. I'm hopefully going to shed some light on this company and maybe convince you to add it to your portfolio, because I think it's one of the greatest companies in the world. I currently have 8,900 USDs sitting in this company, or about 61 shares. Most people don't find it too attractive because the dividend yield is fairly low, but that is not an excuse to not hold this company, guys. It currently trades at a $383 billion market cap, and it sits on the S&P top 10, guys. One of the largest companies in the world for the pharmaceutical and healthcare sector. And if you've never heard of any of their products, we're talking about Listerine, Benadryl, React, and this is a company that does open heart surgeries and another $100 billion worth of things in between. And if I can just break down some of their fundamentals really quick before we listen to the upcoming and the most recent earnings, taking a look at this, guys, they have a total cash position right now of just shy of $20 billion. I mean, nothing to gawk at here. And taking a look at the assets versus liabilities, sitting on about $157 billion in assets and a total liabilities of about $98 billion, leaving them with an underlying asset value of $60 billion. So, I mean, you are paying a bit of a hefty premium over the market cap, and you guys know that I like looking for companies that trade really close to their underlying assets. When we're talking about such a recession-proof company that can survive $500 million lawsuits and still come out on positive earnings in a pandemic, my God, can I give you any other reasons on why you should own this? But let's get into these earnings reports and see what the heck's going on here, guys. So Johnson & Johnson, first of all, on the dividend side, which is what most of us pay attention to, just increased the dividend from 95 cents to $1.01 per share. And going into the historical records of the dividend, let's go back 5 years to 2015. It was paying out 70 cents. Skipping to today, where we're now paying out $1.01. So it's definitely done an incredible job at consistently growing and paying this dividend. Now, this is something you have to look at in the long-term perspective of things, because obviously you're getting a pretty junky yield at a starting yield of that 2.8, 2.7%. But I mean, if you could hold on to this for 5 years, you could see that percentage go up to like 5, maybe even 6% in such a short time frame, or between 5 and 10 years, which is why this would be considered a dividend growth stock, which is something that if you can just hold on to, guys, I promise you're not going to regret it. And taking a look at the current earnings that just came out, we're talking about a major beat, not a major beat in the perspective of the scale of the company, but in the situation we sit in, it beat earnings by $1.21 billion. Nobody really foresaw that coming. But taking a look at JNJ, guys, the GAAP EPS was $2.30 per share, which beat by 30 cents. Again, a massive beat, guys. Or on the GAAP EPS of $2.17, it beat by 74 cents, according to what analysts thought was going to happen. So the total quarterly revenues being $20 billion, or a 3.3% year-over-year growth on this first quarter income. So, oh my God, my guys. So this is something that we desperately needed, because there's a lot of fear around a lot of companies right now, including like Wells Fargo had some terrible earnings. I'm going to touch base on that in a different video, but let's listen to the CFO, that chief financial officer, and see what he has to say about Johnson & Johnson on this recent earnings report.
Was that?
Joe, curious just if you could tell us about your comfort level even making a guidance prediction for this year. You know, our folks are saying maybe a lot of companies won't be comfortable even looking forward to the year ahead. So how come J&J felt like you could even make that kind of guidance?
Yeah, it's a great question, Megan. Good morning. We have a really great lens to a broad base of healthcare, just given the businesses that we're in across really the entire spectrum. 70% of our business is non-medical device. And so we felt we had a responsibility to shareholders. We were encouraged by SEC Commissioner Clayton's request for companies to provide as much information and transparency as they could. And so we just thought we had a nice purview into that. We know that there's very broad ranges. We reflected that in our guidance, both on the top line with a wider range for revenue, as well as the bottom line with a wider range for EPS. So we think at this point in time, based on what we know today, we've taken into account the fluidity of the situation, but we also know that we've got pretty good modeling in place based on what's happened in earlier affected countries. And some other analogs that we've done in addition to the multiple sources of information that are available to do this modeling. So we're in pretty good shape that way. Things will change. If we look at what we assumed in the second quarter for some of our major markets, we assumed anywhere from 65 to 85% decline in elective procedures. What we saw through the first week is closer to that 65%. So we'll see how that bears out, but we think we're in the ballpark with respect to our call on the medical device business.
Hey, Joe, can I just ask you, in terms of what you saw with consumers really buying a lot of things from the consumer product side ahead of the COVID pandemic and ahead of the lockdown? I know I myself did the same thing. I was out buying Band-Aids, anything we might need, Neosporin, anything we might need over the coming month or two. Is that all stuff that's pulled forward and you think will be a drag on earnings down the road as people don't need to resupply their cabinets?
Well, first off, thanks for using our products, Becky, but I would say a lot of that would be a pull forward. Again, we're still very much aligned that our consumer estimates, what we base guidance on in January, are still largely intact, if not maybe a little bit better. We think people will now, just as normal protocol, will be a little bit more prepared and have things like Band-Aids, Tylenol, even Listerine had a banner quarter going forward. So we think there is a little bit of pull forward. But we still are in line with our expectations in the beginning of the year.
Consumers are pretty smart because I got the last Tylenol at Walgreens, and everything else was they had. This is 3-4 weeks ago, but I bought as much as I could. And I guess people knew that it appears to be better, I guess, with coronavirus in terms of I don't know. I don't even know whether the evidence is clear scientifically or whether it's just anecdotal. But I will say that, I'm a big cornstarch baby powder guy, and I did not, unfortunately, hoard quite enough of that. But I wanted to take a look at that chart that we have up. I wonder how many other companies are going to have a V recovery like that. I don't think that's going to be very common, but we talk constantly about V versus U versus L recoveries. That is a V recovery, and you are maybe just a couple of dollars shy of where you were before any of this happened. But I don't think that's going to be played out very, very often in the rest of the stocks that are going to or companies that are reporting in this quarter.
Yeah, well, Joe, thanks for acknowledging that. I'm certainly not a stock picking expert, but what I will say is I think the market does see the strength of Johnson & Johnson. We will get through the pandemic as a society. We hope that Johnson & Johnson is certainly on the forefront. You've heard of some of our initiatives, whether it be vaccine development or just contributions to healthcare providers with personal protective equipment. The dividend this morning is a real good sign of the strength of the company. We're in great financial position. We think this could lend itself to some opportunity for us. If you look at our guidance, we think while we've taken it down, and that's certainly not something we enjoy doing, we've taken it down from a position of strength. We are not cutting research and development trials or programs that create access for healthy living. We are foregoing a divestiture gain because, quite frankly, the values that were available 8 weeks ago to the potential buyer's credit, they've come down in recent weeks, and we don't feel that we have to be a distressed seller. So we're making, I think, sound decisions. We've talked to many investors. They want us thinking about the long term, what's going to make the company successful 2, 5, 10 years out. And so if that's reflected in the stock price, that's a great acknowledgement and recognition of the 133,000 associates across Johnson & Johnson who are just doing a fantastic job and really displaying, I believe, their muscle and the reason why Johnson & Johnson was built for times like this.
Well, you heard it here first, ladies and gentlemen. What an incredible interview from the CFO. And if I can give you one more personal opinion on this stock, I can put this in like the sin stock sector of my portfolio, because usually Johnson & Johnson is one of these companies that is endlessly getting sued. I'm sure you've heard about some of the baby powder problems they had with some like asbestos, I think, was in it. Then you're talking about the opioid crisis, and they managed to glide through these, paying out massive lawsuit bills, and they still come out on top every single time. And it's just a company I think every single person should have in their portfolio. This is something you could put in that you're going to be able to like inherit to your kids. And I definitely compare it to my sin stocks, like my MO, like my BTI, because it just sits in that sector, and it's something that's going to be around for generations to come. And I'd love to know what you think about this in that comment section below. But slap a like, stay cool, stay awesome, and I'll catch up with you guys tomorrow.